Hey traders, and welcome back to another video. Today we're going to be talking about what I consider to be the ultimate technical analysis strategy. This is a strategy I've used for years to pull profits out of the market, and it is what I consider to be one of the best strategies I currently trade. It's a strategy that we talked a little bit about last week, so we're kind of building off of last week's video. If you haven't seen that yet, that video will be in the top right-hand corner of the screen. But today I want to go over this strategy, but one of the most important parts of today's video is going to be something we haven't talked about in way too long here on the channel. And that is, at the beginning of the video, I'm going to be talking about the other aspects of trading you must master to become successful outside of just having a strategy. Having a strategy is wildly important. Without having a way to make money over time or consistently have an edge when you're placing trades, you'll never make money in any financial market. But that's not all you need. There's so much more that goes into trading. So at the beginning of this video, we're going to be talking about the other aspects of trading outside of a strategy that you will have to master in order to become a professional trader. Then we'll dive into this strategy. I'll show you a couple of live trades we had with it throughout this week. I'm going to let the intro and disclaimer roll. While I do, if you're new, make sure you go ahead and click that subscribe button and the notification bell to be alerted about the new content we come out with each and every week. Make sure you click that like button for me, and I'll see you on the other side. That's my bad. I completely forgot that I didn't have the intro saved on my laptop. As you can see, I'm not home. I'm in a hotel room, so you got no intro. You only got the disclaimer. My bad. But let's go ahead and dive into today's content. And the first thing I want to say is something that I see so many traders making this mistake. And it is, they dive into trading. They start trying to learn either strategies or just trying to trade in general and get lucky on the next, Bitcoin, Dogecoin, AMC, GameStop, whatever they can find, whatever's being talked about online. But what they never do, what they fail to do at the very beginning, and what one of the most important steps to becoming a professional trader is, learn the basics. You don't know how many times a day I get questions from people who are trying to actually trade with live money, and they're asking me questions about basic information, like how do I calculate a stop loss in pips? I trade primarily in the Forex market, so pips is how this market moves. If you don't know that information, you should not be trading live. Or they'll hit me with, how do I place a stop loss? While they're in a trade with real money. It baffles me at times because, and I know why. It's because the marketing for trading in any market makes it seem so easy that beginners think they can just go put money in anything and make money without ever understanding how to actually trade. And one of the most common problems is without ever understanding the basics of the market they're trading in. So step number one, if that sounds anything like you, understand, I get it. It's not your fault. It's the way you've been marketed to by everyone trying to sell you something online. That's not how you trade. Learn the basics first. Learn the basics of the market you're trading in. That is the first step. The second thing I want to talk about is luck versus trading. For those of you who have come into the market within the past year, or really within the past year and a half, almost 2 years, you've come into a market that's full of volatile movement in crypto and in the stock market, this volatile movement that's making people rich overnight. And that is appealing to everyone. That's appealing to me. Sometimes I wish I was lucky and not skilled at trading. Trust me, it would be a lot easier. But what you need to understand is the people that caught those kind of moves, it wasn't because of skill 90% of the time. It was because of luck. And you catching those moves is about as likely as you hitting the winning numbers on a lottery ticket. So that type of trading is luck. Real trading is based on skill. It's based on learning the basics, then learning technical analysis and strategies, then learning how to control risk with a good risk management plan and having good trading psychology, combining all those to have a statistic advantage over the market over a long period of time without having some nasty drawdown where you lose half your account. That's what real trading is. Luck trading is taking your life savings, putting it into Bitcoin and hoping it continues to go higher. If you're here for luck, that is your decision. This is not financial advice. You can do whatever you want to with your money. If you're here just trying to get rich quick, totally fine. Learn a little bit about technical analysis. Maybe it will increase your chances of getting lucky. But who I'm really kind of pushing these videos towards, and what my channel is really about, is helping people that want to turn trading into a career, that want to turn into professional traders that are consistently profitable over long periods of time so they can build wealth. So if that's you, then understand that you're on the right track. If you're the person that's over here towards luck, that's totally fine. I'm not against it. I wish I could get lucky too. Go after it if that's what you want to do. But just understand that there is a huge difference between professional trading and getting lucky. Okay? Next up, what I want to talk about is what it actually takes to become a professional trader. And to do that, we're going to dive down to the whiteboard and we're going to talk about what I call the triangle of trading success. A lot of you who have been on the channel for a while have probably seen me draw this out about 1,000 times because I do it pretty often in videos. But this is what successful trading consists of. In the middle of this triangle is all of the traders that are currently making money consistently. Professional traders, not the people getting lucky, but professional traders. What they have mastered is a strategy that makes money over time and that is rules-based enough for them to be able to stick to consistently. You can have a strategy, but if it's not rules-based at all, then this strategy is going to be something you can't stick to consistently. Therefore, you won't have consistent profits. So it's important to have rules for a strategy. We'll go over more about that in just a second. Next, they have mastered having a good risk management plan. A good risk management plan is important to keep you out of your emotions and to initially, for beginners, keep you from blowing your account or losing half of your account balance on like one trade. You need to have a good risk management plan so you can manage your emotions and stay out of these massive and nasty drawdowns that cause you to make really bad trading mistakes. If you guys can hear the fan on my laptop, I'm really sorry. I had to plug it in because it's almost dead, so you may be hearing the fan there. But also, outside of risk management and strategy, they have mastered their trading psychology / their discipline. And there's ways we do this. There's ways in our program that we teach traders how to master trading psychology and discipline. But let's dissect each of these before we dive into the strategy. Stay with me. We're going to dive into the actual strategy in just a second, but I do want to go over this first. The way we have a strategy that we can stay consistent to and that makes money over time. Firstly, this strategy needs to be based on a set of rules. A set of rules that you can look at a chart, you can check off your rules every time one of them happens, and whenever all of them have happened, you can place the trade with a maximum risk and with a place you know you want to take targets. The way I do this is through a system I call CEST. What this stands for is conditions, entries, stops, targets. Every time I place a trade personally, I have conditions that are met. This would be things like, what trend is the market in? Is an indicator lining up the way I want it to? Are we at a level of structure? Did we just create a double bottom? All of those would be examples of conditions. Entries. Did we break the neckline of the double bottom, pull back to it, and create a candlestick pattern? Is my entry just a candlestick pattern? You get the point. Entries are entries. That's the reason you actually press the buy or sell button. Stops. What is my maximum risk? Where do I need to place a stop loss to where my maximum risk is achieved if I lose this trade? Because you're not going to be right 100% of the time. I'm definitely not right 100% of the time, right? So I just said right 3 times really quickly. Sorry. So next up, after your stop, you don't have to have a set target. I like to have an area where I'm going to place a target, not as necessarily a limit order, but where I'm looking for price action to show me signs of selling if I'm in a buy trade so I can exit the position. That's a little complicated. So at first, you probably just want to set target. So what do we need to have a strategy? We need conditions, entry, stop, and target for every strategy that we have. For every strategy we create, for every strategy you learn from someone else, it needs to consist of those 4 things. Now, we have a strategy that we can stay consistent to now because we have rules. What's the next thing we need out of a strategy? Oh yeah, we need it to make money over time, because we can have a strategy to stay consistent to, but if it doesn't give us an edge and doesn't make money over time, then it's irrelevant. It's not going to help us at all. So how do we make sure that this strategy has a high likelihood of producing an edge over time? We do something called backtesting. And backtesting is nothing more than taking all these rules that you've now created or learned from someone else. We're going over a rules-based strategy later, so you'll have the rules in place. It's taking all of those rules and looking through historic data over the past few years, or until you get up to about 100 trades, and seeing how did that perform. If it performed well out of the last 100 instances that it happened, then there's a very likely scenario where it will perform well in the future. Nothing's guaranteed in trading. No one can actually tell the future, but this is the best way to measure the validity of a strategy that anyone can have. No one's psychic, so the best thing that we can do is base our trading on what's happened in the past, because human psychology is what a candlestick chart really is, and human psychology tends to repeat itself over and over. So we look for patterns that we create with CEST, and we backtest those patterns to measure the validity or to see if this strategy could possibly make money over time. So that's the complete process of strategy. Once you have done that, you will have your strategy down. There's other things you do like optimize for the best currency pairs that strategy works on specifically, and optimize for a few other things, but we're not going to dive into that right now because that can get a bit complicated. But in terms of strategy, pretty much you create it, then you backtest it. Risk management. There are 3 different sections to risk management. The first thing you need to think about in risk management is called risk capital. And what risk capital is the amount of money you are willing to bet/lose in speculative markets. If you're trading in crypto, if you're trading in Forex, if you're day trading or swing trading in the stock market, that is speculative trading. That is trading that is you're likely to lose money at some point. Some or all of your initial investment is likely to go down at some point, whether that be through a drawdown or you using poor risk management and a poor strategy and losing it all. It's happened to me before, don't worry, but that is a likely scenario. So the risk capital keeps you from being super emotional if you go through heavy drawdowns, because it needs to be a small portion of your overall net worth that you're willing to risk/lose in speculative trading. That's risk capital. Then we have risk per trade. I call that RPT / I don't feel like writing it out, so I'm just going to do this. Risk per trade, pretty simple. How much of your account are you willing to risk each time you place a trade? We don't need to spend too much time on this. What you'll hear a lot on the internet is between 1% and 2%. In reality, it's based on your own personal risk tolerance. You may be able to risk 5% per trade, and you may not feel comfortable with 2. You need to risk 1. That's completely up to you. But risk per trade, simply put, is the amount you risk each time you place a trade. These are all things that go into a risk management plan, so keep that in mind. And the last part is what I call overall risk exposure. Now, this is the amount of trades you can be in at once based on your risk per trade. So what if you're risking 1% per trade and you never want to lose more than 5% of your account at any one given time because of some crazy news event or something that happens? Well, then you would want to limit your trades to 5 so that your overall risk exposure, if you're risking 1% per trade, is 5% of your total account. So that is everything, risk management plan wrapped up right there. That's the things you need to worry about. Learn the basics, learn technical analysis, create or learn strategy, backtest that strategy, optimize that strategy. Now it's time for you to do your work and create your risk management plan. When I say your work, I mean this is totally based on your own personal risk tolerance. No one can tell you exactly what risk management you should be using. That's up to you. Now that we have all of this done, trading psychology actually becomes pretty easy. You may need to study a little bit about the human brain and understand that risking our hard-earned money is something that you're going to have a problem with. But if you can master your risk management plan to keep you comfortable, and you can have a strategy that you've already backtested and seen to be profitable, that's going to help you a ton with trading psychology. So that's how we master trading psychology, is through the process of proving that this strategy worked, whether that be whatever we're trading, right? The process of proving that it worked is through backtesting and demo trading. Then when we go live and we see that we've made money through backtesting and demo trading, going live becomes a lot easier trading psychology wise. And when you combine that with having a good risk management plan based on your own personal risk tolerance, you have a recipe for good trading psychology at that point. So these are the other aspects of trading that I have not talked about in way too long, but now that we've dove into that and you kind of understand the whole triangle of trading success is what I like to call it, what we're going to do is dive down to some charts. First, we're going to take a look at a live trade we had on the euro dollar. Then we're going to dive down to some charts, and I'm going to discuss this entire ultimate technical analysis strategy with you. So if that sounds good and you're still here, go ahead and smash that like button for me. Leave me a comment. Let's dive to some charts and talk about the ultimate technical analysis strategy. A huge part of this strategy is going to be major levels of support and resistance. Now, last week we went into a lot of detail about how to find major levels of support and resistance. I'm going to leave a link to that again in the top right hand corner of the screen. And again, this entire strategy is going to be built off of last week's video, so be sure to check that out. But last week, what we were talking about is the euro dollar being right here, and that if we continued lower and got into this green zone, in which I call an OTZ or optimal trading zone, that I was looking for a possible bounce out of this green zone here on the euro dollar. Let's check out a really quick clip from last week's video, and then we'll continue talking about the conditions, entries, stops, and targets for the ultimate technical analysis strategy. Here on the euro dollar, we have an area of value or support, a major level of structure. I actually refer to these as OTZs or optimal trading zones. And this area is between 1.1737 and 1.1692. This is an area I'm looking for possible buy trades once we get into it. All right, so this is where the chart of the euro dollar was last week. And before we get started looking at what happened since last week, let's actually dive into what it takes to build a full strategy. What did we talk about? CEST, right? Well, for this ultimate technical analysis strategy, we have a very simple one condition. We only have one condition. That is that price must be inside of what I refer to as an OTZ or optimal trading zone. I promise this is the last time I'll say this, but you will know everything you need to know about how I find these zones if you check out last week's video, which is in the top right hand corner of the screen. But as a quick overview, OTZs or optimal trading zones are just areas in the market where price has been supported or resistance, whichever one it is. In this case, support has been support in the past, and this zone also must have been used by price multiple times looking left as support or resistance. As long as it's a recent level that's been used as support or resistance, and it's been used as support or resistance multiple times in the past, I now have a valid OTZ. So for the ultimate technical analysis strategy, all we need for conditions is that price is in an OTZ. Now, after conditions, what do we need to work on in terms of strategies? After we have our conditions met for a strategy, we want to know what our entry is going to be. So for the ultimate technical analysis strategy, when I'm looking for entries, I do so on smaller or lower time frames. In this case, we are on the daily chart. If you look right up here, you can see that of the euro dollar. So what I would be doing is dropping down to the 4-hour and the 1 hour to look for those possible entries. In this case, our entry was on the 1 hour chart. So on the euro dollar, we jump down to the 1 hour chart. We'll push the market ahead so I can show you this entry in real time or semi in real time. And before I do that, just to prove that I actually did enter this trade, check out the email analysis I sent to all the traders in the EAP Training Program. It'll be on the left side of the screen right now. So now let's move the market forward till we get into our zone. Now we're in our zone. What are we looking for? Well, simply put, I'm looking for price patterns or chart patterns in these areas, and those are going to be my entries. Now, there's a few different ways to enter this based on your aggression as a trader, whether you're super aggressive or super conservative. We will go over all the different entries right now, but also if you're someone who's truly dedicated to trading and you want to know exactly how to trade chart patterns in these zones, I have a full video yet again that's about an hour long dedicated to showing you how to trade chart patterns. Now, I know that seems like a lot of work, but guess what? Learning how to be a profitable trader is a lot of work. So go check that video out if you want to know exactly how I trade chart patterns. For now, let's dive into a few different ways you could enter on chart patterns in these zones. So let's start off with the most aggressive way to enter chart patterns. Here, we can see that we have a double bottom, which means we have one bottom, a neckline, and a second bottom. The most aggressive way to enter this type of pattern is at the second bottom. The way I do that is waiting for confirmation. In this case, that confirmation would be this green candle. So what we would be waiting on, if you're the most aggressive trader, is the double bottom to form and then a green candle after the double bottom. Again, all my rules, the very specific rules for a double bottom, are in that chart pattern video that you can find in the top right hand corner. But for now, let's just try to get through all the different ways you can enter into the market. Again, the most aggressive way, double bottom, green candle. That's your entry. So if you are a super aggressive trader, you now have the conditions you need, waiting for price to get into an OTZ, and the entry, a double bottom, with a green candle. All you have left is stops and targets. Let's get through the rest of the entries first, and then we'll get into stops and targets. By the end of this, you will have a complete rules-based strategy. So the next most aggressive way to enter a double bottom would be, or a chart pattern like this, would be waiting on the break of the neckline. The neckline is this upside down V shape we see in a double bottom. The break of that neckline, the close of that candle, would be right here on this large green candle. In that case, you would have an entry at the close of that large green candle. You would then have your stops placed accordingly and targets placed accordingly. We'll go over stops and targets momentarily. And the third and most conservative way to enter this would be waiting on a pullback to the neckline. So we get our double bottom, we then get a break of the neckline, we then get a pullback, and either having a limit order at that pullback to the neckline or waiting on some type of confirmation like green candles after we hit the neckline, after this pullback hitting the neckline of this specific double bottom pattern here on the euro dollar. This would be the most conservative way to enter this market. So there are three different types of entries. So whether you are super aggressive or super conservative, you now have ways of entering in these zones. So at this point, what have we done? We've created conditions. We need to be in a level of structure that's recently been tested as support or resistance and that's been tested multiple times. We now have our entry. Let's just call it a double bottom for a bullish example and double top for a bearish example. I use other chart patterns, again, that you can learn about in that video in the top right-hand corner. We have all of our different ways to enter. You can pick whichever way you think works best for you. Next, we just need rules for stops and targets. So for this, I like stops to be either below the lowest low of the double bottom, which is right in this area, or below the actual zone. It depends on, again, how aggressive of a trader you are. The stop loss being below the lowest low of the double bottom will mean that your targets are hit more often and that you might be able to get a better reward to risk ratio. This level here below the zone means that you might need more pips to push up to hit your target, but you might do so more often. It just might not equal as big of a reward to risk ratio. So let's go ahead and draw out what an entry may look like. For those of you who are the most aggressive traders ever, remember, for one, this does not mean go out here and start trading this. What's the second step after creating the strategy? You have to back test the strategy. But if you're a super aggressive trader, this may be how you build the strategy. You may enter on the close of the green candle after the double bottom. Aggressive way to enter, along with an aggressive way to place your stop loss, is just below the lowest low of the double bottom. At that point, you may want to look for a 2-to-1 reward to risk ratio. So you would have already hit targets. You may want to look back at previous support or previous resistance for targets. You may want to shoot for some extreme targets like a 4 or a 5-to-1 reward to risk ratio. The exact thing that you do is irrelevant because you're going to be testing this anyway on your own to find out if it works or not, or how it works and how it works best for you. The point being, you need rules for C, E, S, and T. And in this case, we now have rules for conditions, entries. We now have rules for stops, and you can make your own rules for targets and stops depending on how aggressive you are and how big of a reward to risk ratio you want in your trading. Just remember, the higher the reward to risk ratio, the less the winning rate or winning percentage will be. In this case, no matter which one you chose, the price of the euro dollar did come up and in fact hit your target. Personally, I had a 1.4-to-1 reward to risk ratio on this trade and ended up hitting targets quite easily for my initial targets on this trade. So there was a bullish example of what I consider to be the ultimate technical analysis strategy. Let's take a look at a bearish example of this on the pound Swiss now. Okay, so here we are on the daily chart of the pound Swiss, and the reason I'm using a daily chart is because I am a swing trader. I trade on 4 and 1 hour charts. I look for my major levels or my OTZs on the daily chart. If you are a day trader, you would just drop down the time frame that you look at your OTZs, or you look for these major levels. This works on all different time frames. But in this case, here on the pound Swiss, do we have an optimal trading zone in this red zone? Yes, we do. Why? Because this was a recent level of resistance that was also tested multiple times as resistance and support. With that being the case, we have a major level of structure resistance or an optimal trading zone. If we were looking for double bottoms for possible buy trades, what are we looking for here? On smaller time frames. Remember, I'm looking for my zones or conditions on the daily, but I'm looking at the 4-hour and 1-hour for my entry. So what I would be doing is dropping down to the 4-hour chart now, waiting on price to get into my zone and looking for that possible double top. Let's see what happens. We push up, we get one top. Oh, do we have a double top here? Yes, we do. For super aggressive traders, you would be looking at the double top and then a red candle for your entry. For those of you who are more conservative, you would be waiting for the break of the neckline of the double top. For those of you who are super conservative, you'd be waiting for that, then a pullback to that neckline for a possible entry here on this double top. Stops and targets could be set either in a very aggressive way, right above the double top, or in a very conservative way, as in being above the zone itself. Targets could be set accordingly with structure, or could be set to a certain risk to reward or reward to risk limit. After seeing this, you would then place your trade, and as you can see, price pushed down. Now, I do not show you two examples of winning trades to try to show you that this wins 100% of the time, because it absolutely will not. No strategy will, but it's better and easier to give you examples of winning trades. Just understand that this is not something that's going to win all the time, and that no strategy or system you learn will win all the time. But to wrap things up, essentially for the ultimate technical analysis strategy, what we're looking for is higher time frame, OTZs, or optimal trading zones. We define those as recent levels of structure that have been tested multiple times. We are then dropping to lower time frames in order to look for possible entries. How do we place our entries? We currently have C, right? Conditions, higher time frame structure. Entries is with chart patterns like double tops or double bottoms for a bullish trade. The different ways you can enter this from aggressive to conservative have been talked about throughout this video. We then want to have rules for our stops and targets. So at this point, you should have all of this down. Depending on your aggression level as a trader, you should know your conditions, entries, stops, and targets. You now have what you need to go to the next step, which is back testing and optimizing this rules-based strategy, so that you can then learn risk management and have good trading psychology and do everything we talked about towards the beginning of the video. Hopefully that was helpful, and I know for a fact that these zones are a bit subjective and hard to find, so that is why throughout the EAP training program, what I do is point out these zones each and every Monday for all of the members of that program in what I call the best setups of the week. This is going to be an email along with a video I do each and every Monday that shows you the exact zones I'm looking in for possible trades. And at that point, members can just look for the exact entry reasons we discuss in the EAP in these zones. So if that's something you're interested in, then the link will be in the description, or you can go to the website you see on your screen, www.eaptrainingprogram.com. Along with that, we also have a ton of free material that you can find on the link on the screen as well. We actually just got mentioned in Yahoo Finance for having an extremely detailed, complete beginner course for anyone who is interested in the Forex market and in Forex trading in general. You can check out that article in the description, and you can go to TTC Forex course or FX course, the link will be on the screen, .com, to find that free beginner course. It'll walk you all the way through what you need to have a solid foundation for Forex trading success. Again, I hope this video was helpful. If it was, make sure you go ahead and click that like button. Go ahead and comment if you made it to the end. Subscribe if you are new, and I will talk to you guys in the next video. See you soon.